Hello traders, Nick Shaheen here, and it's been 9 days since my last confession. No, since about probably about 10 days since my last video. It was just after the earnings debacle on Roku. That's what we're looking at today. So if you've seen my videos before, I'm not a big fan of its fundamentals, but that doesn't stop me from trading it, mostly on the bullish side. So the last time in the video, to recap, if you haven't watched it, go watch it if you haven't. And if you're not a subscriber to this channel, it's free. Go ahead and hit the subscribe button and the alert so you can get alerts on the videos I post. All right, so having said that, last time it was the, is this a buy to dip opportunity? And then in there I said, yes, I do have two triggers for that. This orange line and one that is no longer there. That's because it triggered, but I opted not to buy the dip yet. And I'll tell you why in a second. So the second part of the video, towards the end, I also said, I see no reason why 145 shouldn't hold. And it's holding. It bounced off of 142, 143 with a tail. So the lowest close was like 144.50 something. This one probably is the lowest close. This is a 4-hour chart, so if you go on a daily, you probably have a better idea. Regardless, what we said was true, so we can continue on from this platform. If I'm considering buying the dip, I should make sure that this doesn't fail, because if it does, then you can buy the dip at a lower level with more conviction. Why? This is a very sharp pivot point. It's very clear. There's no ifs, ands, or buts about it. I think last time I said there's one, sorry, the chat room's open, so there's a link to the chat room down below in the description. Pretty soon I'm going to take out the free trial for it and have it be pay, and you can cancel just for practical reasons, but for now it's still free to try. So this candle is important because it kind of gives me a range, so check it out. I mean, I can literally put a box around it and tell you where this stuff is trading right now. So check it out. This one candle right there stuck out, and it's a complete perfect doji. What's a doji? It's complete indecision. They open, they rally, they fall, and they come back and close it about where they open. It's like, I don't know, and then they move on. So look how nicely that set the stage for this beautiful box there. So having said that, we're still there, so nothing has changed. My concern, why I didn't catch the falling knife, because I probably would have by selling puts on the way down, or put spreads, even better when I don't believe in the stock, is the extrinsic factor. I don't like the market in general. I get it, a V recovery, but why the hell are we making higher highs? I get the recovery to go back to where we started from, except what has changed? The crap that got us there, COVID, is still here. Worse, the effects of the quarantine is the unemployment level. It's way worse than it was before. So things are like the worst conditions, the worst economic conditions we've ever seen globally. And you want to not only recover what you had when you had the best economic conditions you've ever seen, but exceed them and buy a whole lot for the NASDAQ. The NASDAQ like doubles, basically. You know, hit the high and then they exceed it as much as they hit above it. I'll show you in a little bit. So I'm worried about Roku and other stocks. So it's not Roku specific. From a trading perspective, I would rather wait for this dip down here. So 135-ish. Not a hard line in the sand. If you want a better hard line in the sand, why not pick the point of control? So the 127-ish, 126, that orange line, I don't draw this line, that's automatic. This is basically mathematically where they've traded it the most. So if you take all these volume bars right there and you throw them up as to where they happened, most of them happened here. That's literally what this is saying, and by a lot. So the next two closest bars are right above it and right below it. So this whole zone should be very supportive on the way down. But guess what? They don't ask too many questions. If the markets are crashing, I'm not calling for a crash, but we need one. But if the markets are crashing, they're not going to ask, oh, where was the point of control? They're going to go all the way down. So whatever I do, I make sure to make it in small increments. If you love the stock for the long term and you don't want to even consider selling it or protecting yourself, fine, then don't. Why are you watching the video? I asked. That's because you know in your heart that it's good to look at alternative ways of managing risk. So here's an idea. If I own 100 shares, I can sell covered calls against it. And given that the VIX is still elevated, believe it or not, it should be 16-ish. That's the average. It was in the 12s before. It being high makes it the price of options high. So then I can go out and capitalize on that by selling covered calls. And I don't have to like fight the weekly fight. I can go out to the end of the year and sell I haven't looked, probably a call that's over $220. And what's the worst that can happen is that I profit from here on out and then have to sell my shares at $220 and then keep the premium I collected. So there's no lose. The only lose is that I actually have to rebuy it at 220. Meanwhile, I profited from here to 220. I used 220 out of the blue. I did not check it. Okay, but there are tons of premiums I can sell along the lines. I can do it weekly. I can do it once a year, once a month, once every 6 months. Personal preference. So technically, nothing has changed. I'm going to take out that box for now so we can discuss what's the threat. So you've heard of head and shoulders and inverse head and shoulders and all of that. Technical jargons. So sorry about that. Wanted to make sure that the phone doesn't continue ringing. So here's my worry technically. So it's great that it's bouncing really hard. And then, but after all said and done, what does this look like? I don't know if it's an official name for it, a complex head and shoulders, although I see four shoulders on one side, a head in the middle, and only two shoulders here, so it might ping pong a little bit more. What I call this is a neckline being attacked. This level is under attack. How many times is it going to hold? One of these days, if they go below it, they're going to fall down. How far down? Technicals should say the height of the neckline. So as high as it went, it should come down about this much. Usually, I say, yeah, maybe, but I have to look left to see if there are any interim spots where it can hold. There are. This zone, and this zone is definitely supportive. So it will have support. So it won't be like whoop all the way down under normal circumstances, normal price action without a crash. So there is risk to buying the dip here. So let me see here. One of them triggered. I don't know which one. Is it this one? Yep. That's the one that triggered. I told you I didn't bite for it. So I'm going to move it down to here. And actually, I shouldn't have moved it. It would have worked. But I didn't want it to trigger like at the open on tomorrow. Speaking of, today is 8/19. Happy birthday to my best friend. So nothing has really changed. They're still trying to find footing from this debacle on the earnings. It's been orderly. It fell fine. But then it's finding footing without lower lows. It fell and then double bounced, so it's 15%, let's say, ish. That's a correction and a half, because Wall Street considers 10% a correction, 20% a recession from that perspective. So it's a correction and a half. The opportunity to the upside is any breach of these fails. See how many times it's failed right here? So if I wanted to draw a short-term trading pattern lines that would excite me, I would say, look, they've been attacking this and they've been drawing some higher lows as well, so it's getting tighter and something's got to give. So is it going to be up or down? So if it's up, that's great. I should have drawn it with the polygon tool first of all. So I will do this, and then if it's up, it'll probably do this. I'll fix it. I ran out of space on the right. And on the way down, it would be different. It would break down. See, I could have a discussion on, do I chase the breakdown of the trend line or the level? I'm a level guy. And in my case, I would choose levels, but I'm drawing the breakdowns of the trend lines. Whoops. So this would be this is what it would look like, kind of. So I don't know which one will happen, but one of them is coming. So this is where you set your alerts, and I will do it here. And mini lesson. This is where I set my alert up here, meaning I'm chasing the breakout from level. Why? The break out from the trend line is as soon as it broke this line right there. But I chose not to do that. For me, my personal preference, I'd forego this rally from here to here because I don't want to get faked out, because as soon as they hit this level, selling pressure is going to come in. I don't want to make that decision. Same here. So people will start chasing it as soon as it breaks through this trend line. Not for me. I'd rather chase it from the break of the level, this level. All right, so if you don't know what that means, then it's a longer video that you need. Anyway, no need to be upset on Roku and people who say short it or whatever. They probably don't hate it. They just are realistic about the price action. So let's go down to 15 minutes to see if we can get some more information. 60 minutes. Not a lot of extra information here to the purpose of this video. I can see tighter levels like this right there, 150.75 and 146.23. So those are important shorter term. All right, next signing up. Hopefully you take my opinion on looking into selling covered calls, not naked calls. Please, no naked selling anything.